It feels different. Es que es distinto. No importa si estás en Saturno o en la Tierra. Al final se necesita una buena charla con un amigo, especialmente if he happens to be an expert. Quien la apueste, at the end, it's all you can get.
Welcome to another episode of All You Can Dead. This time we're in Mexico City. We have this beautiful background. And right now I'm sitting with someone. I was actually trying to remember how we met. And probably I reached out to you on LinkedIn.
Yes.
I actually don't know. Do you remember how we met?
Yeah, we actually met via LinkedIn. You reached me out. I believe you had a question on the RUC, and you were very. It was a very interesting question that we had a conference call and we spoke about the RUC for about an hour.
Remember what we talked about, or what was I curious about?
Yeah, I believe you were pretty much curious about how the RUC system work in Mexico, and if it's in general terms how the RUC system worked, and I don't recall specifically what questions you had, but it was a really good conversation.
Yeah, I really enjoyed our conversation because one of the first times that I probably talked to a lawyer that said to me, I was able to do this transaction using a different type of. Is it a different type of law? Factoraje, sucesión? Is it like it's different types of structures that were not previously seen before? And you were the first person that told me, oh yes, I use this. And I was so impressed that you were like, yeah, like that's legal innovation. And you were talking about it. And we talked about RUG and this. But I met him through LinkedIn. And Mao is a senior associate at FGB Law, the Mexican boutique that spun out of Mayor Brown's Mexico City's office when the U.S. firm withdrew from the market in October 2024. He joined the founding team alongside Sebastian Fernandez Alonso Marquez under partners like Raúl Fernández Briceño, Francisco García Naranjo, Jan Boker, and Javier Garibay. And what he does is what Vaas exists to verify. So he structures the financings, the securitizations, cross-border transactions, and trust-based collateral schemes for foreign lenders deploying capital in Mexico. So I am really excited to talk to Mao. I think we agree in a bunch of stuff, but he is someone that genuinely cares about getting things right. Or at least that's what I get from feeling from you. And I want to start with something, and I want to get your hot take on this. But if we look at the First Brands situation, so for the people that may have it's a big it was a very big things on the news. But First Brands was an U.S. automotive aftermarket parts supplier. And so you would recognize like Fram filters, one of which I would recognize, Reyestas brakes, etc. A real company, real revenues, real customers. Between 2008 and 2025, its founder and his brother built a financing empire on top of it. Billions of dollars across banks, credit funds, and receivables financiers. And then last year, in September, it filed for bankruptcy with over $9 billion in liabilities and $12 million in cash. Big question that I have, because I think everyone is talking about it, is how does it make you feel that what you structure doesn't hold up for fraud?
First of all, thank you for that very good introduction. I really appreciate that, and likewise, it's a great pleasure to be here. Of course, speaking to you, and specifically about the First Brands fraud case. I think you have a very interesting question. To be honest, I don't think that, legally speaking, this was a failure, because contractually speaking, the documentation was there. You had UCC filings, you had perfected assignments, you had everything in place. And the question here, I think it's more deep than we think of, because the issue is not the legal side of what happened. The actual root cause of this is way deeper. Asset verification, which is pretty much what you guys do. Why we had this very huge fraud case in the States? The main reason is that we collateral of the loans and all the financing structure there behind cannot be verified. So pretty much the assets that were acting as collateral or were sold to third parties were not verified. So we had issues like double pledging of assets. You were selling receivables that were non-existent, inflated receivables, and you have a series of issues within not the legal structure as such, but verification of assets, and that's where you guys bring that value added to the whole industry, because it's one of the key cornerstones of these types of transactions, and mainly asset-backed financings.
Like, you told me that you were recently in New York with about 500 bankers and a bunch of lawyers, and it started raising the same questions. Okay, so if it is asset verification, how does the bankers protect against these types of frauds? What do you think are the main things that came out of that conversation? Like, where do you think that people are changing versus like where they have not changed? Like in Mexico, we have asset verification done through the master servicers. Why do you think first the U.S. it doesn't have that? And do you think they're realizing that they need to, or what is your feeling, and what do you think the industry is feeling?
I mean, it's also a great question for to respond. Well, what I notice is that bankers are not used to third party verifying assets, right? What do bankers do? They finance assets. They are looking for a yield, right? And that's their business. Bankers are looking for a deal, and they want to lend money and have good borrowers, right? They don't do that work of verifying assets. They just see spreadsheets, and they just see the numbers, and that's something that for sure is going to be very interesting to see ahead of time how the whole industry, banking industry, will start engaging third parties to verify collateral. They're going to start, taking more steps to be able to grant to their investors that the funds are safe, right? Because if you're lending against real assets, you have to verify that those are actually existent, right? Because that's the worst case scenario for every banker or fund. You're lending against something that has already been pledged or doesn't exist, and that's exactly what I think is going to happen in the next few years. We're going to start to see more third party service providers that will actually do the Mexico, for example. I think that's something very good, especially in structured deals, warehouse financings, that it's pretty much market standard that every single facility has a third party reviewing the assets, right? You have Vaas, you have other players that are doing the work. They are verifying, borrowing bases. They're verifying that, making the reconciliations, providing real time data about the portfolio, which helps a lot within the transaction as a whole. For certainty purposes for everybody, right? But especially the people that are lending the money.
So I was recently at the Structured Finance Association, and it's interesting because the lenders, the ones that are structuring these, a lot of times say that's I don't want to tackle that problem, right? Like that's not my responsibility. That's not what I was. I don't get paid to basically go verify a data existence. Where do you think bankers should start asking questions, regardless if they're not the ones solving for the problem? So what do you think are like the 5 most important questions when they're going to hire, for instance, a verification agent or a master servicer, or basically a third party that it's helping them think through this like fraud scenarios?
Yeah, and I think for banking institution and funds looking for third party verification agents, for me, in my view, one of the most important things, it's of course track record. Have they worked previously with any other transactions? How do these transactions? What's the outcome of the transactions? Another important aspect is, and this is for me at least, a very important aspect, is the technology-wise. Is your third-party service provider able to provide you with, real-time data on the portfolio? Can you have weekly, daily borrowing base information, exact reconciliation on payments? And I think that's one of the most important things right now that I've seen that actually provides great value to the financing parties, right?
And then from a verification agent, what do you think it's missing in Mexico, in the US? Where do you think verification agents need to migrate to based on these new types of frauds, based also on new types of assets, right?
Yeah.
Where do you think we're lacking as an industry? Where should we go to? Like, what questions are we not asking? What are we not pushing for enough?
Yeah. I think that in receivables financings, we are actually very advanced. There are lots of ways that you can track if the obligor exists, if there was actually a loan. You have lots of information to actually verify that that receivable exists, right? But I see a big gap in other type of asset financing deals, and especially in hard assets. I think we have a huge gap on financing against assets because it's very complicated for a third party verification agent to actually go to a place and verify that lending against machinery, for example, it exists or it's owned by the apps. Industry wise, it's actually on hard assets, and I think we should start working towards solutions to find that how can we fill that gap, and that's good for everybody. For attorneys, we can give certainty to our clients. Funding parties, of course, they want to have that certainty as well. And in terms of borrowers, that's also super important because if you can, as a borrower, say to a financing party that you have all the infrastructure to actually verify that the assets exist, that is going to impact, of course, your interest rate, right? Because it's all about risk and pricing. If you can have a certainty about your assets and what it exists, you actually take out of the equation the risk factor of the assets, and I think that will be impacting pricing of the loan.
One of the things that we have tried to establish at Vaas is like this concept of what are the things that need to be replicated, or basically what do we need to figure out in every transaction, regardless of the nature of the asset, whether that's a receivable, whether that's a hard asset. And we come up with like three properties. Let's call it like that. First, existence. Second, ownership. And then third one, cash flows.
Sure.
What I have found very hard to prove consistently and to declare, oh yes, that asset exists, is how do I know the documentation is actually real? Because that's primarily where like we've done it historically. In fact, historically, you wouldn't check 100% of all the documentation, except maybe in some types of assets. But you typically do like a percentage of the loans to give you like a confidence interval to do it. How do you think about it from the law perspective, right? So when I, for instance, come as a verification, I won't ever in the law and in my agreement say, hey, I'm going to verify the existence of the asset. What I'll say is, hey, I am going to receive all the documentation from the borrower and I'm going to do these checks. Where do you think that are we going to have that distinction forever? Like this sort of like metaphysical whether something is actually true, like are we real, right? Like then versus like how do we prove actually existence, and how do we get lenders comfortable by doing that? What if the documentation, for instance, is false?
And I think that's a very complex question of yours, because we as attorneys, it's very easy to have reps and warranties, right? You can rep whatever you want. I'm gonna for sure rep that I have title to the asset, and everything that you want to read, you're gonna read it, right? That's how deals close. If you have a correct rep or the reps that the bank wants to see, you're not closing the deal. But in terms of the verification agent, it's actually pretty complicated for you guys, because you cannot actually if you represent that, you're taking too much risk, and that's something that nobody want to do, right? If you wanna rep that actually an asset exists, it's super complicated for you to take on that risk. Why? Because there's lots of work behind giving that rep, right? For example, if you have equipment or machinery, you're lending against that type of assets. You have to review the invoice. You should perhaps review if there was actually a transfer, money transfer funds. If there's a contract between the party selling the the machinery and the borrower. And there's lots of stuff that you would need to do behind the scenes to provide that rep. And I mean, you could, but it's actually very complicated if you having a big scale in your business, right?
Yeah. And it also very much differs by the type of asset, because you do have infrastructure that may allow you to do something much easier than others. So I'll give you one example. So let's say we were to prove an asset existence, let's say receivables. Well, I can go to the El SAT, which is the IRS equivalent, to look up whether that invoice actually exists.
Right.
But one of the things that I find very interesting, and this is something that I have not been able to get, son los factureros. So a person that is creating fake invoices, they are actually on SAT, but it was not created for the purposes of actually like paying for a service and invoices. It was for the purposes of like tax deduction in some weird way.
Very weird way.
Very weird way, right? Like, and these are the things that like it's kind of hard to explore sometimes with the market, because it's like, okay, what happens at that point? The invoice is actually real, but it's not real.
Yeah.
How do you think about like these types of like, should we call it frauds? Should we call it like things that shouldn't happen but it still happen? How do you think, for instance, from like if you're structuring, how do you think about it from that perspective?
If I think it from that perspective, I mean, it's super complicated because people get very creative, especially when you're talking about frauds. People are crazy and they do crazy stuff just to make fraud against people. It's all about who's getting the funds, and if they're getting the funds and the entity does not exist, it's good for them, right? Because they're getting the money, and once the money's out, getting it back, it's the issue, and who's carrying that issue? The banking institution or the fund, right? So in terms of structuring, and this is of course more, I don't think it's even a legal issue. I think it's more of a underwriting issue, and not an issue. I don't want to say issue. It's more of a diligence piece when underwriting, because if you want to, this is what I actually see within the market, and private credit funds are lending money. They actually know their client. They actually know that they have had other type of financings with other institutions, and lending money is it's in my view, it's all about trust. If you trust the counterparty, you're gonna lend money, and I think that's something we can see here in the first round's case. Actually getting into a big institution, Jefferies, for instance, lending money, it's not that easy. It's not that easy to get into that level of financing. And when you get there, you have lots of trust within the not only the banks but the whole system.
Yeah. And it's funny because like there's better infrastructure. Like for instance, you would think that the U.S. would have better infrastructure than Mexico, but in the U.S. you don't even have. And I often repeat this to all the things related to the U.S., which are this: the U.S. doesn't even have a way to figure out whether the invoice is real at scale. And what I mean by that is, if you look at Brazil, if you look at Chile, if you look at Mexico, if you look at Colombia, in 100% of all those cases, there is a government stamping at the time the issue gets created. But in the U.S. doesn't have that. The U.S. doesn't have a registry where you can do that. And I'm not sure actually if we're going to get for the U.S. government to implement that. But what I do find interesting is what happens when you don't start following these steps of like, okay, what if you cannot understand whether the existence of the asset is real? So maybe you have to call the client and that it's going to the supplier. Hey, is this invoice real? Is it pledged to anyone else? Has already someone? And then that goes me back into my second question, or that takes me into the second thing, which is ownership. So one of the things that I have found that Colombia, Chile, Brazil has really pushed forward is for the invoice or for the receivable to become a negotiable instrument.
Right.
That is something that Mexico is still lacking.
Yeah. Yeah, absolutely.
And I recently told you before we started the podcast, you were like, oh man, I had never realized that, right? Why do you think Mexico has not done it yet? Like, why Chile, why Brazil, why Colombia, Peru actually has it? Why do you think Mexico has not done it?
To be honest, I think it's more of I think big changes into the system. For instance, making an invoice a negotiable instrument require lots of cooperations from private parties. For instance, making such a structural change within our system would require banking institutions help. It would require attorneys help, and people in the government, and it's to make this type of structural changes within the Mexican economy, because that would change a lot of how we do business in Mexico. It requires a very very big coordinated. Yeah, that's why it's not happening. And actually, why we are not doing that? It's because we haven't realized what are the benefits outside Mexico that brings into their system that we can translate into Mexico, right? Because if that's something that's working abroad, it's our job to understand why is it working and how can we bring that technology into Mexico, right?
Yeah. In fact, there is a very interesting statistic. If you look at the like the amount of factoring that it's done in Chile compared to Mexico, it's much more what happens in Chile than in Mexico, even though the GDP of the Mexican economy is like 3x
Yeah.
or 5x what Chile is,
Yeah.
right? If not more. I forgot the statistic, but that to me is something incredible. Like when you set up like an infrastructure that actually works, that people actually can trade on, you can actually build an economy, you can build transactionality around it. But I think that you said it very well. It's our job to make sure to understand why it's working and where it isn't. But that takes me to the third point, which is cash and cash control. And what I have found very interested in the US is we typically structure the things as a master trust, which is the one that it's collecting 100% of all the payments, 100% of all the payments of that borrower. And then there is a third party called a master administrator, which is reconciling the payments
Right.
and then distributing the payments according to the rightful owner, which goes back to step 2, which is like for the ownership, which goes back into step 1, which is existence. So if you don't have existence, ownership goes out the window, and then therefore cash flows goes out the window.
Right.
So you still need to prove first whether the asset exists, who's the legal owner, and then the third one, which is cash flows. Why do you think the U.S. it's not doesn't have the same level of, why do you think there's so much embedded trust within the system that a third party has never been established as part of the master trust or the collection trust or the master trust agreement, or the master SPV or the collections SPV? Why do you think the US is lacking? And do you think they're waking up to, given the frauds that we're seeing in the market?
Yeah. I think one of the main reasons is because the U.S. system as a whole, it's very tough. If you actually do something, you pay for it, right? And I think the rule of law, it's actually works. That actually works, and that's why in the states, committing fraud or doing something that it's out of the scope of legality, of course, you think it twice, right? The rule of law works, and I think unfortunately here in Mexico and many others, we lack that, right? So if we lack a tough or strict rule of law, what we need to do, we need to build stronger systems, right? And that's why we have many other things here in Mexico. For example, we have the RUC system, we have public registries, and the system itself builds many other mechanisms to provide third parties trust. We I think that's the main issue.
Yeah, we had to build infrastructure given that the rule of law is not as strong. But given you pay for it, but now you've lost the money, right? Why do you think it felt like it went so like undetected for so long?
I mean, it's very and speaking about the first branch case, and this is actually a question that I made myself as well. How did this get undetected for so long? It's very complicated to say because they made a pretty complex financial scheme around the fraud, right? They actually had lots of asset-backed loans that were which collateral was thereafter sold into an SPV or structured finance deal where the asset was actually isolated from bankruptcy. And you know it's not only that, they also did lots of financial engineering records, and it's all about how they are working. They know so well the industry. They know when a third party is going to lend them, that they just simply figure out how to make their assets work in their benefit. Of course, using it twice, double pledging, or fabricating invoices. They actually had a very sophisticated fraud system within their structure, and I think we get back to square one, right? We're not used to having a verification agents, and that's one of the cornerstones for asset-backed facilities. I do really believe that once we have third-party verification agencies, and we build that infrastructure for these types of transactions, the industry is gonna benefit a lot from that.
Yeah, I think I was recently in San Francisco, and they made this comment, and I keep repeating it because like I find it very beautiful. So they had asked like, what do you think are the biggest challenges within your industry and for what you're solving for? And I was trying to take a step back as opposed to like criticizing what the industry is doing. Like I wanted to share my thoughts on something. So I want to hear your reaction to this. So I said, if you look at the majority of lending was done primarily, at least for the last couple of decades, banks are incredibly regulated. Banks have a ton of compliance.
Yeah.
Banks have to um make sure that their asset liability management is
Right.
spot on, that their operations make sense. Sometimes they move slowly because they cannot break things fast, like perhaps the tech world
Right.
can in some cases. And then when 2008 happens, then you started seeing that a lot of the lending happens outside of the of the banking world. Then and you can call that, in fact, even DeFi, right? Like all the
Yeah.
like lending or everything that it's in the crypto world. You have embedded lending, you have the shadow banking, you have private credit, you have all these different ways by which lending is getting done outside of this.
Right.
And if I take like, okay, lending is the primary word in both of these, but the infrastructure that we have within the banking world, we think that it translates one-to-one into this. The infrastructure, not the risk, because of course, like lending to a bank is not the same as lending into a fintech,
Yeah.
right? But the infrastructure by which you say, hey, how do I know an asset is real? You're never doubting, for instance, the CLO market. The CLO market is incredibly big. You're not doubting whether that asset exists. Does that make sense? Why? Because it's a bank
Yeah.
doing it. So when you think that you're in this world, you're translating all of the operational benefits, all of the compliance benefits. It may be something that people may not want to do. Some people may not want to follow the or they may think the regulation's stupid, whatever that may be. But there is an infrastructure behind it. As soon as you take that out and this world starts growing, I think people are starting to realize this, but it's that the benefits of being in the banking sector are not translating into this. And even the same bankers that are in the front office, that are the ones that are structuring these, they don't know how to verify an asset.
Yeah.
Because they've never had to question that internally.
Yeah.
Because they trust that if a bank is actually faking a loan, I mean, the most that you could do in 2008 is high losses.
Right.
You know what I mean? But
Yeah.
we're not faking a loan. You had it or you didn't have it.
Right.
What's your reaction to that?
I mean, first of all, and stressing out one of the core things why business happen is trust, right? Why banks trust as much as to their clients, right? Because they know them. They have had those relationships for many years, and if you've had a client that has been compliant, has paid down many loans, and it's not the first deal you do with them, and you have seen how the company has grown thanks to your funding capacity. You start getting acquainted with their day by day, their necessities, and you start forgetting about the fraud can happen, right? And once again, banks are in the business of getting a yield. They are all trying to get a yield, and they are not in the business of verifying assets, although they have teams that do verify assets, right? And we've seen many global banks that have actually big teams for reviewing reports and doing allocation of the underlying assets. But the thing is that when you for instance thinking about a cross-border deal, you're financing inventory against a company that is based in Mexico, right? And you funding party are in Chicago, for instance. How would you verify that the assets are real? Are you sending a person from the bank on a monthly basis, weekly basis, whatever, to check that the closest? It's not the infrastructure that a bank or even private trade funds have, right? And that's why it's very important for the private sector to start thinking about this as a big issue, as a systemic issue for everybody, even for us, day by day people, right? Because the financial system fails, it affects our day by day, right? And once we start thinking about that issue on the table, which is verification of assets, that's where things start happening, right? You get more interest from banks to hire third party service providers to do the job, and you start seeing growth on that sector, right? And that's what we should aim for as professionals, that stressing out the importance of having in these types of deals, asset backed deals, verification agents, and start establishing mechanisms and procedures to actually make sure that the assets you're financing exist, right?
One of the big questions or pushback that the industry has not been able to sort through is, given that it's not a requirement for you to have a verification agent, the lender may impose it, and then it becomes a requirement.
Right.
But there's no government, there is no industry standard that
Right.
says, hey, you do need to do it. Then the question becomes, who pays for it,
Right.
right? What I have found very interesting is that the borrower almost always ends up paying for everything. Almost always.
Even for legal fees.
Even for the legal fees. I won't go into that. There's clearly right now no incentives.
Mhm.
Until shit hits the fan,
Right.
there's no incentives.
Right.
And while there's no incentives, how do you think originators should behave? Because if they're not incentivized to pay for that fee.
Yeah.
So if I have a lender that is requiring me to pay whatever basis points to a third party that I don't need because I know that I'm not committing
Yeah.
fraud, right?
Right.
And then the lender doesn't have an incentive to lose the deal
Yeah.
because, again, they only care about yield and deploying their capital. What do you think that happens in the short term?
It's a pretty complicated question, and you're spot on that, right? It's all about incentives. If I'm as an originator have no incentive at all to be paying to a third party service provider, why should I pay that if I know I'm doing the business right? So I shouldn't add that cost into my investing, because that's not beneficial for my business. But if you look at from the lender's perspective, everybody and actually everybody's going to look for something. They're going to look for certainty about what they're doing, if their business is properly structured or not. If we're talking about asset-backed financing, this is going to be something in the short term. You're going to start to see that many lenders are gonna ask for actually third-party verification agents for all types of movable assets, right? And that's what I see. It's gonna happen eventually. And the mechanics, RUG filings, UCC filings, and everybody, every single team. I'm pretty much certain that it's going to happen. That everybody's going to be looking into the same things and having the most available the protections available to them at that moment. And if that means hiring a third party, lenders are certainly going to push for having that.
Yeah.
Yeah.
Well, we'll see when it becomes a little bit more industry standard rather than don't push it, because then I will lose the deal. One of the things that you mentioned was perfection.
Yeah.
Where do you see, like, tell me about the pros and cons of like the UCC versus the system that we have in Mexico, which is RUG.
Yeah.
And talk to me about where do you see, if you had to redesign the system on both sides, how would you think about it?
Right. I mean, I think we've spoken before about the pros and cons of mainly the RUG system. For those people that don't know what system is, it's pretty much a public database that works as the UCC CIMAL here in Mexico, right?
But it's national, which that is a very big difference compared to the U.S., because the U.S. has by state.
Right. Yeah. Here in Mexico, the RUG is a national database that pretty much has all the information of security interest or assignments on movable assets, right? And if I would say that the RUG system is actually a pretty awesome, very well done platform. And I do want to say that because Jan, one of our partners, was the founder of them, which is very interesting to know. And the RUG system as a whole works, right? Because if you're a third party that you're going to purchase an asset and you want to see if that asset has been sold before or it's subject to a lien, you can do that. And it's actually free, which is good. And if you in comparison, for example, the UCC, if you want to file against a company or you want to search on the UCC, it actually has a cost. And that's the main difference here in Mexico, that it's completely free. I mean, right now we're having some issues with RUG. I think they are lacking funding, we've seen the RUG system not working properly for about a year now, which is very concerning, at least from our perspective and lenders' perspective, because sees that everything's working, especially when you're speaking about movable assets, right? And if you have that issues with the RUG system, I mean, it just provides uncertainty for everybody. And I think perhaps we should think about how we can make the RUG system better. Us that are within the industry and know the specific needs of our clients, and you as a verification agency, we should push for improvement on the platform for sure. And if that means making the RUG system on a cost basis, and which is better for infrastructure in terms of infrastructure and funding, I think it's good, right? And but bottom line, for the RUG system, I think it's a great initiative from government for many years back. That is, it's pretty much standard practice filing with the RUG.
Yeah.
Funding entities always ask for the RUG filings, and I mean, there are certain things for improvement for sure. For instance, when you're trying to file with the RUG, you can file whatever you want, right? And I think that's one of these issues, because you see everything, you see many things filed with the RUG, and sometimes a RUG filing cannot be properly done, which is actually brings liability to your client, right? And we should have at least some guidelines on how to file with the RUG.
Yeah, and at least some checks, for instance.
Right.
One of the ideas, for instance, that I had was if that an actual asset has not already been pledged. And the RUG won't necessarily give me 100% certainty of that. Because if you look at why the RUG was created, it was not created to register assets.
Right.
And I think that's the biggest differentiator. But because no one, and I think the RUG migrated from almost kind of like UCC. It's like, hey, here's like what I'm covering. And it was like very blank, or very like statements about what is it that it's getting a lien on. But people moved away from doing that only. And then they started adding the idea of the asset.
Yeah.
right? And so you started saying, okay, well, maybe the ID of the invoice is what I'm going
Right.
to register. But what if I register it not by the ID of the invoice, but I register it by the ID of the contract,
Right.
right? Because maybe I'm doing an assignment agreement of the contract
Mhm.
and not a factoring receivable.
Yeah.
So I think that's where either it will take an eventual opinion or it won't take an opinion, and they will just continue to grow. But I agree with you, it cannot lose the ability to stop registering
Right.
or searching for liens, because as soon as the rook stops, if it goes on for days,
Yeah.
can you imagine the chaos that it will cause, just because you cannot open search, you cannot register, and it does seem that without funding they won't get through unless they get it from somewhere else within the government. That is also very plausible.
Yeah, absolutely. And I think that is one of the main issues we're having right now, especially with the RUG system, is that uh, we don't see the infrastructure being developed. I mean, it works, but I think it needs lots of improvement. Especially for receivables. I think you have deals where you have a huge amount of receivables being purchased. For instance, more than 100,000 of receivables being purchased. Getting that file with the rule, it's actually an issue. Sometimes you gotta find other creative solutions to make the root filing, make consecutive root filings, or you gotta find a way. But the root system sometimes doesn't have the capacity for the market needs, right? And I think that's something we as practitioners and being in this industry should push to to improve and see how can we can work on solutions that would benefit everybody, right?
Yeah, I agree. Um, where do you think the future of structured credit looks like? Asset-backed lending looks like. I mean, a ton of people talk about tokenization, and then there's the verification agent, then there's crypto, there's the banking world, there's trade finance. If you had to take a guess about where the future is going, what would be your biggest takes?
I mean, for sure, asset tokenization is one of the biggest and I think most interesting matters in the at least structured finance deals and receivables deals. I think that's gonna change the industry, and we're actually seeing that infrastructure is already there. But for example, here in Mexico, we still gotta build that infrastructure, right? But the ideas are there, and how to solve many issues that we have in receivables finance through tokenization of assets and blockchain. Uh, but more specifically here in Mexico, what I see, I think Mexico it has a bright future. I think Mexico it's getting lots of interest from global banking institutions and foreign private credit funds. That's what we've seen in the market, and right now Mexico it's getting pretty hot within receivables finance and structured finance deals. And actually, why is that happening? I think one of the main reasons that this is happening is because uh, foreign lenders are starting to see how Mexico actually resembles many of the structures that they already know. For instance, if you're a foreign lender, you wanna see, for example, bankruptcy remote
Yeah.
structure, right? And many times when new funders are coming into Mexico and looking for advice on structuring deals, they actually ask the very same questions, right? Do you have something similar for an SPV? Yes, we do have it. And we get lots of questions around how they structure deals abroad, and if that infrastructure is already here available in Mexico, or it can be implemented in Mexico, right? And my answer on that is that Mexico is actually a very sophisticated jurisdiction in terms of contractually speaking and legally speaking, but also on the financial side. The structuring is very sophisticated here in Mexico. We actually see its legal structures getting more and more sophisticated. Uh, uh, Funders from abroad, they're bringing new knowledge into the market, and we're seeing how many are getting here into Mexico and trying to actually deploy capital with the structures they already know. And why is that? Because if you're working abroad and your credit committees already know how a certain deal works, they want to see the same working in Mexico, right? And if you don't have the same infrastructure here in Mexico as in the States, for instance, it's going to be pretty hard for the team structuring the deal to explain to the credit committee how the deal works, right? And that's one thing that I want to say that foreign lenders, if you come into Mexico, we have the infrastructure for any need you have, right? It's Mexico. It's getting very very sophisticated in funding wise, and we've seen lots of interest from especially private credit funds, which are actually deploying capital very quickly here in Mexico. And what we have also seen within the market is that you know, uh, global banking institutions, as you previously say, that they are regulated and they have more restrictions about lending. Uh, they are starting to see how they can deploy capital in Mexico,
Yeah.
not directly to their banking branch, but throughout other branches, right? For instance, as a firm, or because they have spotted that they are losing a market share by not being able to fund, for instance, companies that are not yet in their
Banking
level,
requirements. Yeah.
right, banking requirements. And it's very interesting to see how big banks are starting to find creative solutions to bring their money into don't want to say smaller deals, but
Yeah.
value wise, 20 mil, $50 million deals that a big bank wouldn't.
So, I've also heard a lot of interest from what do you think it's besides explaining them and walking through them, like the similarities and how do you structure a bankruptcy remoteness? Where do you see yourself that there's like the biggest learning curve for actually for them to commit to Mexico? Where do you see like, oh, once they understand this, they're all in?
I mean, what we've seen with new lenders here in Mexico is that they want to put their feet in the water, right? And they usually do that through committing with small deals. They don't want to deploy huge capital if they don't have like the look and feel of a previous deal, right? They want to see how the a deal flow is. Want to see if you can do a cross border deal swiftly with hero attorneys. They want to see if the Mexican attorneys and companies are sophisticated enough to cover the needs, and that's how we've seen that new funders come into Mexico.
And how long typically did they take to like, okay, so the deal started working and they see the cash coming in, they see the interest coming in. How long do you see that curve? Like, how does it, where do you see like the maturity curve of these lenders roughly?
I would say 3 years.
Interesting.
Yeah.
Interesting.
Because year one, it's more like a structure deal. There's lots of moving parts within a structure deal. You have a third party verification agent. You have a Mexican originator sending borrowing-based reports, loan tapes. You have a trustee that perhaps needs to make a lot of mechanical things within the deal, distribution of funds, and there's lots of moving parts within a structure deal here in Mexico. That once you get it, then you have the look and feel, and you have the processes designed for that type of deals. You start to see the deal flow come, right?
Yeah.
And it usually takes about a year.
That is very interesting. Don't wait too long because it's still going to take you 3 more years for you to get comfortable. Mal, I want to ask you about one last thing, which I think it's very hard for lenders that are investing in LATAM, which is the currency risk factor.
Mm-hmm.
You're lending, you have dollars and you're lending against Mexican assets.
Mm-hmm.
How do you get them comfortable?
I mean, the easiest solution is a hedge, right? That's pretty much how you cover that risk, and for if you're not lending in pesos, you just have a hedge in place, and that's how you pretty much cover the currency risk. That's pretty much how we've seen how it's covered, and how lenders are comfortable doing business here in Mexico.
And there's multiple ways to hedge, right? Like there's forwards, there's futures, there's options. What would you recommend to a fund that has never dealt with currency hedging before, given the variety of options? How do you, for instance, depending on who's taking on the hedge, whether you're gonna include the mark to market of the hedge embedded into the borrowing base?
Yeah.
How do you? What would you recommend a client that has never done FX hedging before?
Yeah, I mean, uh, if you see big companies that have cross-border transactions, they typically have like a hedge guidelines. I think it's very interesting to see how they have those hedge guidelines in place, and also speaking with hedge counterparties here in Mexico, right? I think that's the easiest way for a lender or funding party from up within the transaction, right?
Yeah. Um, so you were at Mayor Brown, and Mayor Brown decided to leave Mexico. Why did you decide to go with your partners to these boutique firms? Like, why didn't you go to a big firm? Mayor Brown was very, very, very big. What convinced you to stay? What convinced you to follow these partners?
I mean, that's actually a pretty profound question for myself because when
Because you're still thinking about why?
actually it's very funny because well, and this project actually was born as I would say a coincidence, right? Because Mayor Brown decided to leave Mexico about 18 months ago, and uncertainty for everybody because you never know what you're gonna do.
Mhm.
And for instance, the easiest thing was to find another law firm, right? And that's for everybody here in the law firm. Right? That was the easiest path. And I actually believe a lot in our partners and the vision they have around the law firm and what we are building here, right? I think it's more about the vision that people have in the company and I would say for you, it's all about vision. And I think what we are trying to build here it's uncommon. We are trying to build uh, a law firm that actually provides a very sophisticated and wider range of services within the financial industry, and especially on cross-border matters, right? If I would say, 99% of my job is cross-border deals. And I think that's where we perform the best. We Mayor Brown team, yeah, still, and we have the expertise to provide a tier one service for foreign lending institutions, and I think that's what I think what make me get into the law firm here and be a founding member of the law firm because trying to build a law firm that it's actually specialized on cross-border deals.
Yeah.
And it's not just about the partners, it's about the whole people working around us. We're trying to teach them how cross-border dealings work, how do you treat an international client, what are the needs, and we actually try to care about our clients and treat them as partners. And we like to have them close, be able to they have a question on how something legally speaking, a structure or something, they feel comfortable of
To call up.
to call up and always being responded by the same person, right? And I think that's where we add value the most. We try to build actual real person relationship with our clients, right? And I think that's what has helped us keep our clients and serve them as they like to, because we provide a sophisticated service and a very personalized service. And
Let me ask you a question. Why do you like the cross-border transaction? Uh, like, why cross-border?
yeah, I mean, I love cross-border deals because you get to work with very interesting and intelligent people. If you work with New York attorneys, you're gonna find out that they are actually extremely sophisticated. And that level of sophistication is it's something that you actually enjoy a lot when, because you get very complicated questions, very smart questions, not only from clients but also from co-counsels, New York co-counsels that they have so much deal flow that they know everything about the industry, and that's what I think we get the most value at it. Cross border deals are of course, complex. I would say that they are extremely complex. But the good thing is that you get to work with from a different jurisdiction that is actually very sophisticated, and all of that is it's value that you get as an attorney, right? For instance, in the future, I'm going to have a very well. I actually very know very well how New York law works, right?
Mhm.
And that's an opportunity that I've had throughout my career that best they got to work abroad,
Yeah.
but it's a very little percentage of people that actually do that.
How can if lenders or someone is looking to find you guys, how can they find you?
I mean, you can certainly look me up in LinkedIn, Mauricio Rivas, FGB.law through Valentina. I'm there in the internet, available even on Sundays, Saturdays.
I mean,
And
we're recording this
yeah,
podcast on Saturday. I was like, Mao, do you want to record it? She's like, yes.
and one thing's having sophisticated clients. That's where I think we provide the best service, and we're actually like when foreign entities like want to have a new business here in Mexico that is sophisticated, because that actually tests us, right?
Yeah.
And it's great for everybody.
Well, if you are coming to Mexico City, if you have something sophisticated, do you dip your toes in crypto, DeFi?
I do, but personally, not as an
Okay.
attorney yet. But actually, one of our partners, Javi, he's a bankruptcy guy, and he's very into it, and
Okay.
he's very knowledgeable in the crypto industry and DeFi and all that stuff.
Well, maybe we'll bring him next. Mal, thank you for coming on the All You Can Debt podcast. Hopefully, we'll be sitting a year from now again and looking back to see if the world has changed, or indeed the world will change, but we'll figure it out what has not and the improvements. Thank you so much for opening up your office to us, and hopefully, I'll see you again.
Thank you very much, and it was a pleasure having this conversation with you, and always a pleasure, being here with you.
Guys, yes.
Free audio post-production by Alphonic.